that sound? Another episode of Broker Talk. Thanks for joining in. Today I have some fabulous guests. Let's talk about investment. Everyone knows that real estate is one of the best ways to make your money double. These folks talk about doubling your money in 5 years. That's phenomenal. They have the technology that does it. And let me just bring them in. The Brain Trust and CEO of TrustBricks is Richard Van Ommen. Welcome, Richard.
Hi. Hi. How's it going, Larry?
Good. And it's going great. And thanks for being part of this. Tom, it's always a pleasure. You can wave. I see you turned off your microphone. And Lubomir has a beautiful, is that London or is that Hong Kong?
It is
London.
London.
Yes, it's London.
So you guys, let's get everybody up to speed. You guys have created technology. Everybody understands when you buy your property and when you sell your property, that's where you have two big opportunities to make some cash. But the real opportunity is while you own it and how you manage it. So, Richard, you have created proprietary software that helps understand, create, and predict success. Could you talk about that for a
Absolutely.
moment?
Absolutely. So my background, Larry, is engineering. So I'm actually a systems and automation engineer. And I got involved in the property space about a decade ago and found that it didn't work very well, shall we say. And what I ended up doing is instead of taking the typical route to finding investment opportunities, is I thought, well, why don't I take a look at what a deal actually is from the start and then reverse engineer to be able to figure out how to find those in the market instead of looking at everything, which was the typical industry standard. So we essentially gather data from about 22 years now, which gives us a very fair estimate in terms of what a property is worth and what it will actually rent out for. And by having that information, we then apply that on what's in the market. So basically, any properties that are listed live on the market, we know what it's worth and we know what it'll rent for. And we apply our filter, which then brings it down. So we only look at essentially the best performing properties on the market at any time. So in essence, we've got a cheat sheet to find the best deals. That's basically what we've created.
I think what's really amazing here for a non-engineer, Richard, is that engineers always figure a way out to not talk to people by adding value in their own private little rooms.
That's very true.
Engineers are the best. So I do understand how that works and being able to predict. Do you have any interest in moving to the U.S. market or creating technology? Um,
Absolutely. So, I mean, as a business, we're sort of closing out a fundraise at the minute to essentially continue to deliver portfolio. So we've used the technology we've got to essentially build portfolios at scale for investors. So whether it's working with funds, whether it's working with family offices or any sort of private equity house, or even individuals looking to deploy circa between, I suppose, 100,000 to anything up to maybe 5 million into the property market, um, we're actually able to deliver on building that portfolio for them at scale. Now, as part of us doing that, part of one of the biggest benefits is providing we have access to data, we can roll out the technology we've got globally. And the US, Australia, all throughout Asia, so Hong Kong, Singapore, these are markets that we're actually looking to target over the next few years in terms of our actual global expansion as a technology. But the beauty is we can actually enable anyone looking to build a residential portfolio. We can help them no matter where they are in the world, build one in the UK initially. And of course, as we branch out globally, they can essentially use that anywhere.
I just think it's kind of fascinating. One of the other things that I've learned along the way with investors and engineers, that more specific that you are, the more successful that you are. That you really drill down and figure out how things work in a way that's of value to your audience. Um,
Absolutely.
who would you say? an oddball question. Who would you say is your direct competition? Do you have anybody in that, or people that you admire that have created? And that it might not necessarily be in the residential or investment real estate realm. It could be some like Grubhub or Airbnb. That's a technology that changed an industry.
Yeah, I mean, I suppose when we take a look at other technologies, there's a lot of technologies that people have built that do fragments or bits of what we do, but there isn't anything out there that actually does the end to end that we're currently doing.
Hmm.
So you've got some people that use, and typically it's proprietary and people keep it in house, they don't commercialize their information. So you're talking like big investment houses, they may have their own proprietary information or proprietary technology, but they won't commercialize that or open it up to the mass market because they want to build their own portfolios. So part of what we're doing is we're enabling average Joe to be able to build a high quality residential portfolio using proprietary technology for themselves instead of having to then compete with the big banks or try and do it the old school way. They essentially get access to the same sort of power themselves. Um, Hopefully that answers your question in a roundabout way.
No, it does really very specifically. The only correction I would make is the what did you call them? The private Joes, the little Joes,
Yeah.
investors. No U.S. investor of any sort would ever consider himself little or a woman. It might be that American like, oh, look what I'm doing. Um, is there a real sweet spot in investment? I have heard from a variety of different people talking about an individual investor and managing that property. That 10 properties is often the tipping point. If you own 10 uh, uh, well producing properties, or do you have different models? Much bigger scale, I would assume.
So I suppose it kind of varies depending on what the investment model is a client's looking for. So as you well know, there's some people invest based on the appreciation of the value of the asset or the land. Some people invest based on the net cash flow, the net income they're going to earn from the property. So for us, we actually focus more heavily on the cash flow whilst investing in areas where there is appreciation, there is an increase in value. And typically, we're looking to achieve circa 20% returns for our clients annually based on that. Now, we do find that if an investor invests and owns sort of five or less investment properties within one company, so we obviously advise investing via a company in the UK for tax efficiency, anything less than five properties, they don't tend to make the kind of gains that they would had they invested in sort of 6, 7, 8, 9, 10. And of course, the larger the portfolio, the lower the risk. Because if you have one property empty out of
Exactly.
five, that's a large
Exactly.
portion, but 1 out of 20 is not such a big issue.
Yeah, that scale can skew if they have that one person is 40% of your market. But
Correct.
uh, i that's the simple math. We're actually talking at a higher level here. Thank you for staying low for this average Joe. Average Joe, that's what you said. Average Joe. Uh, there are a lot of
Yeah,
Joe.
I think Larry, just on that point, a couple of points, if I may. Firstly, when we're talking to asset managers or fund managers or family offices, the conversations always start at a million upwards. So in terms of sweet spot, it really you're talking anywhere starting point of 10 up to around about 10 million, and that's where you can really have some fun,
Right.
because you might be buying 50, 60, 70 properties. They're all roughly the same. They've all got the same yields. They're all perfect for letting, and they're all under one blanket, which is an SPV that the client has just set up to own those. And of course, if they want us to, we'll do all the management. We'll find the
Sure.
tenants, we'll do all the managing. So it's very
Correct.
hands off. The other thing I wanted to say in terms of our typical client, and whether it's the US or the UK or anywhere else, it's pretty similar. It's really difficult to make money on the money that you've got at the moment if it's sitting in a bank. As I mentioned to you before, we're chatting to a guy in Monaco today, and he said that the returns over there are even worse, and the UK is doing incredibly well.
Right.
There are lots and lots of people out there that have done well in life that are sitting on cash
Right.
and would like a safe home for it that is performing above the norm. And I think
Right.
that's what TrustBricks provides to those types of clients. So whether it's US investors or UK investors, I think we've got something that's really exciting, that's led by technology, and I think that's the game changer in terms of
the other
space.
thing to add to that, if I can, is there's a lot of clients that don't realize the wealth that they're actually sitting on.
Right.
So you've got the usual old adage by people where there's the belief that paying down your mortgage on your home is the best thing to do. Whereas the reality is, if you were to release some of that equity, you'd be paying a small percentage in terms of your earnings. So let's just say you pay 2% on that money, but you're actually making 10%. You're actually making a margin of 8% on that investment.
Right.
So a lot of our clients we're working with now are typically people who followed the old school route and been paying down their mortgage, and they're releasing sort of 200,000, 300,000, 400,000 in equity. And we're then building them a portfolio that nets them, after all expenses, somewhere around £1,500, or I suppose in US it'd be somewhere around $2,500 to $3,000 a month net, and they don't have to do anything extra for that money. It comes into the bank, it's there every single month,
Right.
and they haven't had to dig into their own pocket to get it because the equity or the cash was already available in their home. So it's really nice. It's a good model.
And so I want to make that a little bit, because it's not something that a lot of investors do. Investors need to have some level of understanding of risk and reward. And quite often, the less you have, the less risk you want to take with that. And what you're talking about is when you have the average price point in the neighborhoods in which I work is outrageously expensive. But it's around 2,200,000. So they would be sitting on more than $1 million. But the average price point in our area is $348,000. And that, if you had $200,000 worth of equity, you're saying that you can use that money to invest to have you guys invest in some kind of a thing and expect a much better return. Am I getting that right?
Absolutely. 100%. It's 100% correct. So basically the client would have full ownership of the portfolio, full ownership of the company. We'd have no ownership and no say over how that's managed. We'd essentially be there, similar to an asset manager at a small scale. So the client would invest the money into the company. It's their company. They have full ownership. That company would then buy the properties that we would guide them to buy, so the best performing assets, and we would fully manage everything on their behalf. So they don't have to do a single thing. They can literally sit back and each and every single month receive a check in the post worth however much, depending on how much they invest.
Right.
And they basically watch the value of that asset grow through time.
Right.
And if they box really, really smart in the future, they can basically tie that asset up as a trust to essentially leave to their children, which means it's continually income generating for future generations without the kids being able to essentially sell off the whole asset.
Yeah.
I'm sure you know about the 3 generations of wealth and all that stuff. So
I do. It rarely gets down to that third generation. They're usually partiers.
Absolutely.
A little bit of that in I can't speak about the royalty over there. I will not, because but Tom Brady might not play football again, so we're sorry about that. Or some people are thrilled. Just to throw a little of our football, which isn't really football. What haven't I asked you that you guys think is important for the audience to know? One of them is how do we get in touch with you? How do we get in touch with you?
Sure. I mean, I suppose the easiest way to get in touch is just for somebody to drop an email to Tom. So Tom is our global sales director, and he's working with clients internationally in terms of what we do. So Tom's email address is tom@trustbricks.co.uk. So if you want to know how to spell TrustBricks, it's obviously right behind me, and .co.uk. And in terms of your first question, what haven't you asked? I suppose I appreciate a lot of your audience will be experienced investors, but I suppose the 3 biggest risks when it comes to investing in property, and it's sort of how we negate those by using technology. So risk number 1 is the risk of essentially buying a property over value. So what we've done to make sure that doesn't happen, And I mean, you'll know as a real estate guy, like these items. So we've used data. So we've got data over 21 years across as many data points as is available in the UK, and used machine learning, so technology, to accurately estimate what a house is worth and what it would rent for. And then on top of that, for each house that's purchased, we get a separate individual valuation, as well as getting estate agent estimates and lettings agent estimates. So we basically triple checking all items to make sure that that all sort of ties in together, and we know what a house will rent for and what it will sell for if we need it to sell.
So,
The second biggest, oh, sorry, carry on, please.
I just had a quick question about that because we've
Sure.
had a bunch of appraisers on here, the people who determine value from a different kind of criteria. But looking from the outside, and real estate agents say this all the time, that in the sale per square footage, we don't know if there's high-end appliances and high-end finishes in there or not.
Correct.
And that clearly affects the value when the person walks into the property.
Absolutely.
So I just wanted to throw that out because that was part of what you just spoke about.
Absolutely, 100%. So yeah, I mean, this is all accounted for as part of our valuation. So we look at market averages, and of course, if the appliances are high end, then the buyer basically gets a better deal. But we always work just purely on market averages. So under promising, over delivering. It's always the MO of what we do.
Okay.
So the second biggest risk is, of course, refurbishment risk. So you'll be buying a house, you'll expect to be putting a bit of money into works, and as you know, sometimes when you pull off plaster or something off the wall, it's like a can of worms, and all of a sudden your 5,000 budget becomes 15,000.
Yeah.
So we negate against that by, one, we've got technology, so we've created a refurbishment application online, which accurately estimates the refurbishment cost based on what our team does. Our team then physically, our builder goes out and does a full refurbishment quote. And then we also get a structural surveyor out to do a full quote as well. So essentially, again, we're triple checking to ensure that we don't go over on valuation, refurbishment costings. And it's very rare that we do. And if we do, providing it's nothing like there's no way we would have known, we would typically cover the cost of that for our client to make sure that, we're within budgeted. Right.
Yeah. Yeah. And that's a good way to be.
Well, the thing is, it keeps us honest.
Yeah.
And keeps the clients happy, right?
Yeah.
And this is why
Yeah.
we get such great repeat custom.
Yeah.
And then the final one is purely the property management side. And that for me is by far the biggest risk, because buying and owning the house is one thing, but if it isn't managed correctly, very quickly that, your bottom line is affected drastically, whether it's major maintenance costs, whether it's large void or vacancy periods, or whatever it may be. So we've created, and we're in the midst of refining and creating more technology that basically creates visibility for a client. So on their entire portfolio, they see any maintenance checks, any maintenance issues. They've got full reporting of all of the information that comes through.
Right.
But more importantly, we can get walkthroughs, we get imagery. It's all within the platform. So it makes it very simple for a client to be able to know we're doing everything we need to.
Right.
And on top of that, all of our fees in terms of management all come from rents physically received. So if they have high vacancy or high maintenance, we actually lose out as our model. So we're in it with them, if you know what I mean. So we try and keep it fair.
Right. Here in the United States, especially on the rental, the real estate side, we know that getting a good tenant in there is absolutely essential. And that depends on keeping the property, maintaining the property. If you don't maintain
100%.
the property, the people that live there won't either. And
correct, 100% correct.
So you want it to be one of, it's a TrustBrick property, so that's, you want them to say that, or my company Stories Property Management. You want people to say that, to feel that if they're going out and renting, to see, hey, do you have anything else available? Because keeping your clients, and they're, in the end, the money is quite often coming from the renter.
Absolutely.
That's where the wealth is being built. By the way, you renters out there, call me. You should get yourself in a house, but that's another show.
Hey, Larry, just on that point, and it's a really good point. I mentioned to you earlier off the mic that the programs that we talk to our clients about are always 5 years and looking to double their funds in 5 years. In the UK, can't speak for the USA, but in the UK, the average small family that rents these homes in the UK, because we've got a huge shortage of properties in the UK, which is why there's so much demand for renters. But the average renter, Larry, will rent for between 18 months and 7 years.
Yeah.
So as long as we get, so back to Richard's point, as long as we get the right family in there first, and as I said, there's a huge demand.
Yeah. Then
that 5-year period that we've spoken about is almost guaranteed.
Yeah. Yeah.
Now we can't judge what's going to happen in the economy. So back in 2008, we had a global crash. No one saw that coming. Well, a few people did, but not too many. But as long as things remain the status quo in the UK, you're almost guaranteeing to double those funds in 5 years. So in terms of your investors looking for as good as a sure shot as you can get, I think this is it.
Yeah. And we're not allowed to project that. As a real estate agent, I can't say, buy this house, you'll make money. But you can say the houses in this neighborhood continue to go up, and that's verifiable. And that's not really, it's saying the same thing, but not saying that. That's why it's so confusing for people.
It's how you say it. And by the way, I'm saying the same thing, Larry, in terms of, we can't tell what's going to happen with the UK economy over the next 5 years of an investment. And if it remains, if it goes stagnant or it drops, then of course it affects the overall returns, right? But all things being equal, it should be pretty safe.
So here's a useful statistic to add on for Larry. So since the 1950s, property in the UK has on average doubled every 8 to 10 years since the 1950s. And that is an ongoing trend.
Wow.
Is that right, Richard?
Wow.
That's right.
If it only did it with the cooking. I mean, think how good the food would be. Be almost as good as France, maybe.
Yeah, I'd be massive.
Or Italian, I don't know.
Yeah, that's better.
Good-natured ribbing. I hope you understand.
Absolutely love it.
It has been such a joy to have you here. The show will be up shortly. I'll send you guys a link. But it has been wonderful to have the people from TrustBricks here. And Holding LA. How is Holding LA involved in all of this?
We collaborate with TrustBricks, with investors, family offices, and introducing the potential investors for TrustBricks.
Lubomir, are you the same Lubomir that also is the bodybuilder?
Yes, my background is in fitness.
I said, wow, you can
I didn't know that.
bench press me into a deal. Come on, get that one over there.
Yes, business and sports have a lot of similarities. It's require persistent, daily hard work,
Wonderful.
And you see results after some years. So I think when you have same business mindset and sport mindset with one person, it's a strong person.
Hey, well done, Lubomir.
Yeah.
And you know what? It's also life. I mean, the same with investing.
Yeah.
Put your money and feed it the right way. It will feed you back. It will make you healthy.
Absolutely.
So,
Larry, before we lose you, and it's not for this show, but another show, you must invite us back for a wonderful project we've got in the Bahamas to talk about.
Oh, absolutely. Absolutely. We should do that on location. We'll talk to your investors.
Sold.
Right now, I think it's 4 degrees out there, but hey, it's Boston. It's supposed to be cold.
Thank you, Larry.
So great to have you here with us. Tune in next week for another episode of Broker Talk. It's been